And this is the slide that I really frequently show in my presentations. And I will start from the very beginning of humankind. If you do recall the history a little bit, every single war, every single revolution, every single major change of the society happened because of the fundamental disagreement between the two forces, the labor and the capital. So as an economist, as a fintech professional, hopefully, I do believe that everything has an economic justification. So throughout the history of humankind, the labor said, hey, like we work with our hands, with our brains, with our creativity, so we want a cut of the economy that we're building. And the capital was saying, hey, but the land belongs to us, the instruments belong to us, the know-how, the patents, the brand, everything belongs to us, so we want a cut of a piece. And throughout the history of humankind, apparently those forces were playing with each other, balancing at some point. So those two curves actually look at the distribution of the world's wealth to the two fundamental classes. The dark blue line represents the return on capital. So basically, interpretation is very simple, is how much the capital was able to gain from the world economy growth. And the light blue line represents how labor was successful at cutting a piece of the wealth created. And as you can see, until 1972, they were quite balanced. So basically, whatever the increase in the world's wealth in the economy was occurring, the capital and the labor were getting basically more or less the same returns. Now, from 1972, one thing happened. The capital started to gain massively. And the labor, if you can see, basically is almost flat. So if I can say that in the last 50 years, the return on labor increased 13% if you weight by inflation. Basically, it means that all the increase in productivity, all the technical progress, all the new instruments, all the new wealth that we built, basically was going towards capital, not labor. Those who were interested in 1972, the United States of America ended the gold standard for the dollar currency. Before that, before 1972, for every single dollar, there was a promise to give back a little bit of gold to whoever presents the dollar. It was ended, stopped. And apparently the promise was, hey, like we're going to maintain the parity, we're going to support the currency, we're going to be very financially disciplined. Nothing of that happened. The moment the governments were allowed to print money backed by nothing, that moment the equation completely disrupted. Labor started to basically receive the same, and capital started to earn all the capital gains. Now, if you look at the projections, there are two more processes that are going on. So basically, we're talking that the society is moving towards economy where the human being is not necessary at all. So the capital produces capital. Economically, basically, it goes to the state where zero labor or zero humans are necessary to produce wealth. And every single dollar of earning and return goes towards the capital. We're not there yet, but this is where the trends are showing. And actually, there are some countries in the world, I sometimes mention Norwegia, that are actually able to sustain and maintain the whole country without any single employee. So if a country was to just live on what's invested and reinvested with a national fund, every single Norwegian would receive 25,000 euro per year, just because of the capital gains. So they don't no longer have to work. Next slide, please. And this is the illustration how the governments tend to just print money whenever they want that. The first graph is European space. So this is European Central Bank. This is the pace at which the European Central Bank has been printing money from 2017 to 2020. And as you see, they injected a lot of money at the beginning of pandemia and basically doubled the speed at which we print the money after the pandemia. So the formula, we just print money to shut up businesses just by giving money away to solve short-term problems with the pandemic, and whatever translates into hyperinflation or not in the next 10 years, we just don't care. US, even worse. So as you see, they've been printing money at lower speed. They massively injected the money during the beginning of the pandemic, and they apparently massively increased the speed at which we print money afterwards. So the take on those graphs is very simple. Governments print money at will. There is zero limiting factor, and nobody's limiting them. So basically, there is like no force on the planet which is regulating how the governments are printing money. And apparently, that adds to the first slide. So as you can see from the first slide, the whole financial system is really optimized towards the big capital and the governments. And the question is it fair in nowadays world? So can I have the next slide, please? And this leads to what economists call the capital inequality matrix. And I heard of this term the first time 3 years ago in Davos Forum. And basically the idea was that the whole financial system is really skewed towards governments and corporations and is really not fair to the small companies and the individuals. Because what happens? If you're large capital, a ton of instruments are available to you. You can use venture funds, you can use wealth management, you can use hedge funds, you can do a lot of things to earn a lot. Ironically, I heard the article when during the pandemic, the capital of the 10 richest people on the planet tripled. That sounds like weird. Like we have a massive economical downturn, we have a massive pandemic, everybody's suffering, and the wealthiest just become much more wealthy. That doesn't make sense to me. If you're a big corporation, public markets, VCs, etc., instruments are available to you to basically print money as well. There's been a lot of speculation of what's going on with Tesla. If you look at the market share, at the sales, at the return on capital, it's a fraction of the companies like Mercedes or Toyota or something else, yet they're able to lose money a lot and be the most valuable company in the car-making space. So these are examples how the world is really good for you if you're a big boy. Now, what happens to the small guys? If you're a small individual investor, apparently the entry barriers into space are next to impossible. Here in Lithuania, officially we have around 30 billion people just staying on the accounts in the banks, earning nothing. And that is during the time where the government prints money. Currently, in Lithuania, we record 8% per year inflation. So 2021, we'll see 8% inflation. And the next year, like probably is going to be similar. So basically what's happening is those money decreases in value at the speed of 3 billion a year. 3 billion a year, it's the value of the lost value of the money just from Lithuanian bank accounts. If you're a small company, again, good luck raising money. We're all talking, including Lithuania, that funding small checks is next to impossible here in Lithuania, because apparently when you're small, you cannot afford to pay for the related services, the overheads are big, etc., etc. Net result, if you're a large company, you just print money. If you're a small company, access to capital is really restricted. So this is what the current financial system is producing. Now, next slide, please. And here's, again, because we're very limited in space and time, I just wanted to give you a map of what's going on in the financial markets and how, hopefully, this big, huge say inequality is being solved with the small financial players. They're just attacking the whole financial system from different angles. So these are the major areas of innovation in fintech, at least that we see here in 2021, and hopefully we will go into 2022. And I would just like to enumerate them. So first is apparently lending. Lending money changes. A lot of that is going into peer-to-peer, so bypassing institutions like banks, and a lot of innovations happening in this space. Blockchain crypto, I would say, is the biggest possible disruption to financial space that is happening in recent times. So I'm personally a big believer in both blockchain and crypto and decentralization in general, and I think it does solve a very general problem that we currently have. The crypto space, unlike the central bank model that we currently have just does not allow technically to print money, at least in theory. So I think when the space becomes a little bit more mature, it's a real alternative to the central bank system, which is not proven to be functioning in the current world. So apparently a lot of innovation happening in this space. And just by looking at the participants of this audience, actually notice that there are a lot of participants that work in that space. RegTech, it's another industry which will see a lot of innovation. And basically, this is one of the most challenging areas because apparently on the one hand, the crypto and the blockchain is moving the whole space into unknown territory. On the other hand, the governments are trying to basically grasp what's going on and regulate the space because apparently there's a lot of gray areas and this is one of the domains that will apparently see a lot of innovation from KYC AML to boarding to client monitoring, etc., etc. Now, the personal finance is apparently a very important space. Nowadays, everybody is used to paying by phone, by watch. So improvements and conveniences in that space apparently are very likely to appear. A lot of happening in that space. Payments and billing is something that actually you see every single day. Improvements and so on with the solutions that we currently have. So anything from mobile phone payments to watch payments to transfers around the globe are going to apparently happen here. Insurance, something that has been massively disrupted, and I would say that insurance was on the previous model where basically the money collected were reinvested by insurance companies and the proceeds were used to fund apparently the payouts. So that model is changing dramatically because the regulators apparently regulated the space a lot. So now insurance companies no longer can basically reinvest the collected money and use the proceeds to fund operations. So they are reinventing themselves, and a lot of things is happening in that space. But this is one of the areas where highly likely we will see a lot of peer-to-peer solutions as well. Capital markets. Apparently, one of the major developments in capital markets has been also based on the blockchain and introduction of the new currencies. So I would say that the whole breed of tokens that are linked to various instruments, from futures to derivatives, are just exploding. And again, this is the area where we can probably see a lot of innovation as well. Wealth management. I already mentioned that nowadays, if you don't care about your finances, they tend to disappear. So currently, and before recent, the real wealth management solutions were available only to the richest people. Different kind of funds, private banking, etc., was available to apparently those who can invest $1 million and up. But technology is changing that. So we've seen a lot of just consumer applications that basically do the same things. And management is a mandatory because unfortunately or fortunately, finances is the area where you really have to spend a lot of time optimizing for different scenarios, for different both personal and work scenarios to basically make sure that your portfolio, your assets, your earnings, your wealth at least remains the same. So a lot of things happening in that space. Transfers and remitting still remain challenging, especially given that the general tendency of the space is to regulate and restrict the finances even more. Now, I'm pretty sure many of you have faced banks stopping the transfers because they want some additional information and so on. So unfortunately, transferring money from country A to country B in 2021 is almost as difficult as 30 years ago. And there's been successful companies in that space, from TransferGo, the Lithuanian company, to TransferWise, the Estonian unicorn. So a lot of companies are trying to solve that, but it still remains a challenge, and hopefully it will be solved. And the last thing is mortgages and real estate. Apparently, real estate is something which is very, very important to every single one of us. I've heard statistics that about 80% of the all world's assets are in the real estate space. And a lot of things are happening here as well, from real estate tokenization to lending solutions that are coming to that space. So, as promised, 15 minutes, and my idea basically was to send you two messages. One message is that yes, fintech is improving the tactical solutions, so the easiness of pay and the small things that we enjoy every single day. But the whole fintech has another challenge. Can or cannot we solve something fundamental that hasn't really been working for a while, at least based on what we see here. So thank you for your attention and have a great evening. Thank you.